going. MTAR Technologies margins took a hit in the fourth quarter while it met its revenue guidance for the full year. It closed FY23 with an order book of over 1170 crore rupees, largely in line with the guidance of 1200 crore rupees. What is the outlook going forward? What is the outlook on margins especially, and how is the order execution panning out? We have with us Parvat Srinivas Reddy, who is the Managing Director and Promoter at the company. Mr. Reddy, good afternoon. Thank you so much for joining us. Well, you've been able to meet your revenue guidance, but this time around there has been a miss in terms of margins. You had guided for a 29% plus minus 50 basis points. EBITDA has come in at 27%, and even in quarter four, margins have seen some contraction. What led to this? Is there a pressure on raw material costs, and what are you guiding for FY24?
Oh, we have actually achieved the margins. I have explained this even in the earnings call that primarily what we have done is we had to do some market corrections for some of our key employees across the board. Looking at the future outlook of the company, the way we are growing at 45 to 50% moving forward as well. So that actually has impacted about 4% to 5% of the EBITDA margins for Q4. If that was not in play, then we would have achieved that overall 28.5% EBITDA margin. But that's something which we had to do and which is good for the company in the long-term basis. Otherwise, we have not taken a hit on the margins as well.
This is the compensation given to your employees, right?
Absolutely.
Which you,
yes.
Okay. What's the guidance, sir, on margins for next year? We have your top line guidance, but what could you do in FY24 on margins?
We'll sustain our margins. We'll continue to do at 28% with plus minus 50 basis points. And we have obviously given a guidance of 45 to 50%. We will stick to that.
Sir, sustain at the reported 25% in Q4 or the 27% in FY23 or the normalized margins of 28.5%. What will you sustain at in FY?
I'm talking at a normalized margins of 28% plus minus 50 basis points.
Oh, 28%. Okay.
Mr. Reddy, we would like you to hold on because we have SBI's number at the bottom of our